All right, so looks like we have everybody here. Welcome, everyone. I'm going to go through everybody's bio. We have Zhuang Lim, the CEO of XSQ Global. We have Tamir, who is the software engineer and co-founder of Primablock, and then also Chris York. Chris, your screen is rotated 90 degrees. If you want to try to fix that. There you go. Can you also give a quick bio about yourself?
Sure. I am a managing partner at Esoteric Capital. Before that, I was at Cognitive. We did a lot of consulting on applied behavioral science and behavior change.
Great. So let me kick this off by just posing a question to all of you. We've gone through blockchain games, and then in the first panel we talked about Dapps infrastructure as well too. What do you think are some of the challenges, and where do you see consumer-focused Dapps going over the next into the future? And we can, if anybody wants to jump in and start, I'm more than happy, or I can ask somebody.
Sure, I can start. I think compared to the beginning of the year, I'm actually really optimistic about Dapps and the state of Ethereum. For me, what's really promising is the innovation around decentralized exchanges, and the fact that people are making loans using MakerDAO. I found that to be like, I read a story that was posted on Reddit about some person who got like a 0.5% loan using MakerDAO, and they were able to use the money to buy a car and get a cheaper repayment option than using like a conventional loan from a bank. In particular, I think the innovation around decentralized exchanges has improved a lot over the past year. If you look at Ether Delta, which is I think what a lot of people were using back 2017 or so, compared to something like DDEX or any of the other 0x based exchanges, it's been a big improvement, not only in terms of the user experience, but also in terms of the security. Just really briefly, like the differences in those two approaches is with Ether Delta, you actually had to transfer your Ether or your tokens to the smart contract and then do another transaction to make the trade. Whereas with the 0x based exchanges, you don't actually transfer your assets. You just give permission for the swap to be made, and it only exchanges. It only leaves your wallet to fulfill the exchange.
I think it's interesting that we see. You mentioned MakerDAO in Singapore, where I'm based at. I think there is actually quite a few of these events that are going around. Just today, there is a jeweler, so a shop selling jewelry in Singapore that's taking payments in DAI. And just a couple of days ago, during the Binance conference, they were taking payments in TUSD. So I think part of the focus of the future, I think a very straightforward use case is payments. And I think we are beginning to see, elegant design use cases. There are mobile wallets that is built for merchants. There are mobile wallets that is built not just for the consumer itself. I think the whole ecosystem is coming together. I would say 2019, in Singapore at least, we are seeing a lot of this bigger stablecoin guys, and the year of the stablecoin guys are actually coming to fruition in that sense. Like Tamir, I think the future is bright, for the apps. And I think when we start to look at the app, so something that XSQ is doing now is we have coded a zero knowledge wallet, and part of that design and architecture we started to kind of code this all in was, what should we decentralize? 2017 and I think part of 2018 was that we should decentralize the whole world, we should tokenize everything, But I think a focus on where and what should we decentralize. In this sense, our mobile wallet, our team and us, we decided, okay, let's decentralize identities. Because once you start doing that, decentralized storage of identities actually creates an immutable, unhackable system that protects the users itself. So I think we are starting to see consumer-focused applications, or Dapps as you call it, that focus, on a few parts where we decentralize, certain very, very important.
Well, I take a little bit of a different view. When you look at the data, there is a clear trend where you have decentralized apps that are using Ethereum or Tron or so on, and they have hundreds or maybe the top ones, thousands of daily active users, right? And when you say a consumer app, if you go in SF and you try to raise venture capital, they're looking at millions, and on the high end, Facebook, Twitter, billions of users. So the question is, why is no one using this stuff, right? And everything is pretty simple when you think of it in terms of the incentives, right? So people make an educated guess and they make errors in doing so, but they essentially say, how hard is this to use and what is the benefit of using it, right? And maybe their predictions are wrong, but at the current standpoint, the ROI isn't there for them to learn a new technology. The usability isn't good, and it's not better than centralized applications, right? So, what would have to happen? We have a lot of products that are decentralized before blockchains, right? We have credit unions. Everybody uses a big bank. Very few people use credit unions, and they prefer credit unions. If you ask people who use Wells Fargo or who use Chase, they actually don't like their bank. They hate big banks. And if you ask people who use their credit union, they tend to love it. But the numbers don't work out because Chase is much more incentivized to acquire users, and they get more resources, which enables them to acquire more and put up barriers for them to switch. And that's why nobody uses decentralized stuff off the blockchain. And I think on the blockchain, you're going to run into the same problem. So it's instructive to think of the incentives that way.
I mean, it's interesting that you bring up a credit union. It seems that, usually credit unions are not, previously they were not investment focused. They weren't taking client funds and then turning around and investing into other securities or property or other things like investment banks were. They were actually some of the more well-protected entities, well, some of them in the 2008 crisis. So it seems, I do agree with you that there is a lot of possibility for decentralized lending, for decentralized payments, which we just haven't seen yet. And you're right again about it's all about the incentivization. And then additionally, one of the biggest things that I think, and we also talked about this in the first panel as well, is the UX and UI. How do you get someone who's never used a blockchain before on to use your application? Or is it going to be that, for the time being, that the only people using Dapps are a small section of people who understand, blockchain technology and properly using a crypto wallet? So I don't know. I think there's some big strides that need to be made, but there is a lot of possibilities of what we can do with consumer-focused apps into the future. Tamir, I'd like to come back to you. You are working with Primablock, which has done some amazing stuff. And I'd like to get your thoughts more on what you think that the decentralized apps, maybe either Primablock or other ones that can provide for these types of either finance or other types of services around that, either financial or payments or in that certain sector. So I'd like to get your thoughts on that.
Sure. So the first point I'd like to make is that actually there's a spectrum in terms of decentralization, and you can go to completely centralized, where like it's just all built in to like a relation, some sort of database operated and maintained by the company, or you have smart contracts on the other side where it's just like completely decentralized. No information is kept by the company at all. It's all on smart contracts. So I think that there's definitely a lot of user experience hurdles in the realm of completely decentralized applications. But what's often overlooked is like these hybrid applications where you have like the important parts that are on a smart contract, but the rest of the stuff that can be in a normal centralized database or what have you. So for example, like with the decentralized exchanges, you don't need an account. You can go in with MetaMask or whichever wallet and do your trade. But you can also create an account that is stored in the decentralized exchanges servers, and that will track a bunch of information for you and make it more easier to use. And then you only need to send the transaction at the last step, and then all of this other information. And in fact, the trade itself is handled on like an order book, which is happening off chain. So I think in terms of the future, a lot of it is going to be in these hybrid applications where more and more is going to be pushed off chain. And it's just going to be like one like final part that is even done on the blockchain. And with going back again to decentralized exchanges, I think we'll get to the point where you'll do maybe one transaction, let's say, to where you'll allow tokens to be used by this decentralized exchange, and then after that, there might be no transactions at all, and it's just done by signatures, and the decentralized exchange will do the transaction for you, and it'll simplify the UX even further. But in terms of the innovation, I think what's the one thing that the decentralized apps can offer that centralized apps can't is that if you look at something like 0x or any sort of protocol, for example, an exchange protocol, you have something where the foundation is built and everybody can compete to make a better UI. And that's really cool. Like imagine like you could have the infrastructure of Netflix already there, publicly available, and just anybody can make their UI on top of Netflix. And so it's like I could create a UI, and as long as people use it, then I could benefit in terms of revenue. And so that is a completely different twist, and I think it's going to take a while for everybody to get used to that possibility.
But the thing about Netflix though is that it's just most people don't want to worry about which version they're using, or if the version has different modifications that would allow it to, I don't know, get movies in, say, Norway that they normally wouldn't get in the United States, to be able to pass country restrictions. When we talk about consumer-focused apps, usually for things to become consumer level and to become like widely adopted, they need to be easy to use, and two, actually it's mostly easy to use. If something is easy to use and people see that their friends are using it, they'll come to it, right? So I know that DEXs, well, not DEXs, but permissionless exchanges have been one of the big Dapps, I guess you could say, of 2017, 2018. But they've not really been able to keep up with any centralized exchange. You could probably take the total volume of IDEX for the entire year, and it's not even going to add up to one day in what Binance is doing. So yes, I mean, I don't know. I mean, I would like to get your guys' thoughts and ideas on, how a lot of these dApps move away from just being at the fringes of blockchain technology right now and become more consumer focused and more widely adopted.
Well, I think the first thing is that users don't care about blockchain, right? They care about convenience. They care about saving money, saving time, basic stuff. The way I think about blockchain is it's the same as if your app is on Heroku or AWS. They don't care how it works, just care that it does work, right? And this is one of the reasons, back to the incentives, that it's basically impossible based on the current incentive model to imagine a open source project or a dApp outcompeting Facebook or Netflix, because the financial upside incentivization is so much higher for these centralized networks and the people who own them, whether it's the VC or whether it's the founding team or the high level people, right? So it's the same reason that Linux isn't a big consumer application compared to Mac OS, right? It just doesn't have the same impetus to keep improving and doing a kind of distributed, everybody designs it, open source kind of collaborative process usually doesn't lead to the best consumer apps. It can lead to very good technologies for the back end. Developers have shipped a lot of really great open source code and frameworks, but not consumer stuff for other developers, right? So I think that's why it's really hard to look at where people are incented to spend their time and their revenue and think that somebody who is not incented by their investors or their bosses to acquire more users and financially resourced to do so can, how do those network effects get outcompeted by a decentralized app? It just doesn't seem possible. And if you look in the real world, you have the credit union example, but you also have co-ops, right? Why is, REI not bigger than Amazon? Why is, the Mondragon Corporation in Spain a cooperative, probably the most successful cooperative in the world? Why is that not bigger than Zara, right? And it's because of the financial incentives for the centralized entities.
I think I would tend to agree over there. I think incentives it's part and parcel, and I think it's more important in any ecosystem for adoption. So we saw a few projects over the last year, and of course this is still early day, blockchain projects and all that. And particularly, we came across good money, and I think that there's a lot of guys, I guess everybody on this panel will come to money, and I think one key thing that they have done successfully, not just on the race, but the positioning of how they incentivize, I guess, millennials, Gen Z to come on board. It's to give these potential users, a part equity, an ownership of the bank that they are building on the blockchain in that sense. Incentivizing people straight up with 2% interest rates, very strong consumer-focused marketing. It kind of makes you want to join the bank, join the movement, because the banking system as we know today is kind of outdated, dinosaur, and is eating more than they should in that sense. So I think one key part that there is the incentivization of joining a community that everybody else believes in. Number one, outright incentivizing people. That's number two. And I think one key focus is also, we rightly point out, I think the UI UX, the user experience amongst this whole ecosystem. It could be the movement, it could be the incentivization model, it could be also built-in products in a sense. This whole 3 or 4 different realms combined that basically pushes for more consumer-based apps. And I think there is when we develop stuff, when we develop software, there is a plus point for centrality. To centralize certain things, it kind of build on things faster, and it could develop a certain technology and certain software even faster in that sense. So and I guess we have to choose really where to incentivize and then all of this incentivization model, what should we decentralize in the app in that sense, I guess. Yeah.
Tamir brought up an important point earlier, is that a lot of decentralized apps are simply going to use the blockchain for payment finality. That the data will be processed off chain, and then when there needs to be some transfer value between two different entities, then that can be transacted through either one of the blockchains. But actually doing the processing on chain, and it's probably not what we're going to be looking at anytime soon because of the restrictions. Tamir, I'd like to get your kind of thoughts. You founded Primablock, and you have been running a really great company that I'm sure everybody in the crypto space loves and has probably used at one point. What have you seen? Or what has been some of your thoughts on kind of the differences in the growth between when you started the company and where you guys have arrived now?
So with our company in particular, it's like very much correlated with the market itself, because people were have been creating pools mostly for the purpose of gathering funds and then using that to buy into a pre-sale deal or some sort of ICO deal. So in the beginning, it was definitely quite a lot of growth we were getting, and then after the summer, it's sort of definitely has been a lot less than what we experienced initially. But in terms of the technical challenges, I think what we realized, we gained like a lot of wisdom, because we built initially something where it was very stateless, and it was a very much a thin layer on top of the smart contract, and then we realized a lot of the UX pain points when you have an app that is completely decentralized, and that's when we understood the hybrid model is what ends up working out the best in terms of UX. And I think it followed a similar journey as well with the decentralized exchanges. So when I saw the evolution of going from like Ether Delta to a 0x based relayer, I identified a lot with that.
Do you think those changes were more technology focused, or do you think that they were based more on increased regulatory action and investigations?
I think both. In our case, there was definitely a demand to provide an option for KYC integration. And so we worked on that, released that early on in the summer. But at the same time, so that's on the one end with regulation, but on the other end, if you're creating a decentralized app and you have like user generated content, like why on earth would you want to store that on the blockchain? Like that should be, shouldn't be on there. It can be on any like centralized database. And then once you allow for user generated content, and then you need to have a link between like the person who's owning things on the blockchain and who's actually owning things in terms of the user generated content, having a link between those two identities.
Right. Chris, have you seen, what would have been some of the interesting Dapps developments that you've seen working through Esoteric Capital?
Well, we're not hugely focused on them. We look at the numbers because they're very important. If people are using a network, it often foreshadows that network's asset going up in value, right? So a spike in the amount of active addresses on Ethereum, in a certain window or in a certain way can be a very strong quantitative signal that it's a good short-term investment, right? We don't really look at or take philosophical positions the way a VC type does or the way a multi-coin type of fund does, where we say, oh, this app is good, therefore the asset is good, or something like that. But I do think that Primablock is a very good example in the world of investments, right? Because when you look at non-blockchain companies where there's that spectrum that Tamir was pointing out of decentralization, right? Uber is a somewhat decentralized company. They don't own their cars, right? Amazon, most of the people selling things on Amazon are not in fact Amazon, but they control some of the core elements of the user experience, such as the fulfillment process, right? And on Uber, you have the same thing with the background checks and so on and so forth. And you could replace elements of that, of the role that Uber and Amazon play, with a set of rules that people can vote on, that there can be some kind of governance model in a network that are decentralized. But the issue is, again, on the network effect side, where if you have another company that's the private version, the fully private version, versus the mostly decentralized version, they have more resources and more of an incentive to grow their network, right? So I think the model that Primablock has, where they kind of take a tax on the incentives and they make the front end not really based on blockchain technologies, they use traditional web technologies, Web 2.0, right? That's a really good model. And I think the more successful people are going to err a little bit more on that spectrum towards centralization, because the centralization enables you to provide the good UX and it enables you to create the right incentives to give a really good UX UI developer or a really good marketing person the financial upside, right? Versus an only network incentive driven upside.
Very interesting. Now, I think that there's we've all kind of been coming on this common theme of hybrid integration, of taking the best parts of both Web 2.0 and then mixing in with Web 3.0 to come up with much better programs. So it sounds like when we're talking about Dapps, it's not that we're going to have some sort of open source, anyone can take it and make changes to it sort of application or protocol, but rather that we'll have companies working on different Dapps, pushing out all the updates, hiring all the developers, and benefiting from the creation of that Dapp. But certain parts of the technology that are going to be involved and used in it will be decentralized and will be, I guess, using some sort of either public chain or private permissionless chain or private permission chain. So yeah, it'd be interesting how in the first year, really, we had, well, I don't want to say first year, but in 2017, we had the advent of MetaMask, which allowed for a lot more Dapp development. So really, we've only kicked off this, the use of Dapps, and especially consumer Dapps, over the past year or 2 years, especially with the rise of EtherDelta and then into IDEX. So I'm going to bring in one of the answers from the last panel, which is to say that trying to simply slap on a Dapp or trying to simply take something that exists in the real world and then make it into a Dapp isn't going to work. There's going to have to be problems which we run into, which then we develop a Dapp specifically for. But it's not just taking the technology that we have right now and then just trying to integrate it. It's more finding the problems first and then developing something around it. So, I mean, based on the numbers, what have you seen for this year, Chris, and last year as well too? Now that it's 2019.
Based on the numbers of what, the usage, or?
Yeah, Dapp usage.
I mean, Dapp usage is really, really bad. Like, again, in the heyday of some of these apps, decentralized exchanges, which are the most popular Dapp, right, by active addresses, they're 3,000, 4,000, 5,000 daily active users, right? And if I made a consumer fitness app for the iPhone and I tried to raise money with 3,000 active users, I would get laughed off of my VC's campus, right? So that stuff, it's not really quite there yet, right? And it's fine. given the stage of the technology, that you have a limited group of people. But even the group of people who are there aren't super active. It changes a lot with the price because they have to be reliant upon some of the prices of these assets to engage with some of the products, right? In a way, not in all cases certainly, but in some of them. And I think that's kind of a barrier, right? So the right question to ask is, given that we see this data where nobody's using it, and then there is slight kind of blips when something goes viral, like CryptoKitties or something like an exchange benefits from a bear market or a bull market. What would have to be true to get somebody to use it, like your mom, right? And MetaMask gets at some of it. It has to be easier to sign up, right? If somebody goes to an exchange, they don't know necessarily what it is. It's an interface that's overwhelming to them. They don't know how to create an account. The way that you create an account is a different brand product, MetaMask versus the name of the exchange, right? All these things would be non-starters in regular consumer apps, right? So I think what developers have to do, or product managers have to do when they look at this stuff, is say, how do I build something that somebody, like when your mom started using Facebook, right? When the barrier is that low that they can kind of get in. And the laundry list of things that you have to do for that to be true is actually pretty long. And that's why Harvard students were the first group on Facebook when it initially came out. It took a long time to even get to, non-college students, and then a long time still before people like your mom are using Facebook, right? So that's going to be the trajectory. Still early days, but I think the roadmap on the things that you have to address and the usability bar that you have to meet is there. People just have to get the resources and the willingness and the talent on their teams to be able to do it.
So I guess with Tamir, now that you've seen these decline in numbers, what are some of the ways that you're looking at as being able to expand with Primablock, or just in general with Dapps?
Yeah. So with Primablock, we just before the new year we launched a feature where you can create pools that are where instead of raising Ether, you're raising like a stable coin token. So you can create a pool of like TrueUSD or a pool of DAI. So that's something that we spent a long time working on. And we're just like kind of waiting and seeing how like the users behave and trying to see what need we could fit in there. With Ethereum going into staking, there's a possibility of people like creating pools which they could use to stake and therefore kind of get generate Ether that way. But it's still a bit too early in terms of the staking roadmap. But I've just most of my time during the holidays, I've been looking at what's been happening in the sort of decentralized finance area, and there I've been pretty impressed with like with MakerDAO, and really keen to see what happens with companies like DYDX and being able to do options on the blockchain. To me, that seems really interesting. I agree with Chris on all the points he said about user adoption. What I would say in response to that is if it's possible for people to take out loans when they could not before, then we might start to see more of an uptick. So if something like MakerDAO or Dharma makes that a possibility, then that would be really exciting for me.
Yeah, decentralized finance is one of the most interesting aspects of the future of blockchain technology and Dapps for me. I know that you mentioned DXDY, also Nexo, and the other lending providers which have come out. It's very cool that that's a semi-centralized lending platform which is Nexo, which allows, it's got a company which then allows for people to take loans. But I do know that there's also other programs like Ethland and a few other ones which are fully decentralized, where people can put their own bids and offer their own loans to other people without having to use any intermediaries. How much demand there is for that? I mean, it really depends on where, I guess, just how much liquidity comes in and how many people are offering. But it does have the possibility to gain some steam, I think. Brian, are you looking at anything in decentralized finance? XSQ Global looking in that space?
I think in Southeast Asia alone, so we kind of took some of this decentralized finance concept. So P2P lending, it's something very big, not just in China, in Southeast Asia also. I think particularly where I come from, we are creating and we are testing out, kind of like Primablock, but I wouldn't say pools. But what we do is we got a fair bunch of money exchange guys, the guys that do money exchange for tourists, and all that, to kind of put together and bid for kind of best prices for, say, a loan to a bunch of people for us, like farmers in Indonesia in that sense. So we are testing out models like that, where it's not necessarily P2P, but the whole strength of maybe the liquidity of 5 or 6 money changers or remittance that's coming together and delivering, a product or a service at a much lower lending rate than, say, traditional finance in that sense. Also, the kind of merchant network that we are building out for crypto, where again, we kind of attracted a few of these OTC guys here in Asia and say, okay, if these few merchants today want to transact with a bunch of consumers in that sense, can we get rates for Forex down, for example, if we trade it, with a stable coin like DAI or TUSD? I think particularly for TUSD, I think it's interesting because they just lowered the redemption volume from 10K to like 1 without redemption fees in that sense. And we're testing a few of these models, and we should hit the wider markets again March. Again, it's in our experience, it's a matter of the user don't care how it works. The user cares that it works. So as long as we can bring long-term value, which I guess that's what Chris said, to incentivize the user and us as a platform translate that narrative very clearly and directly. I think that's something that decentralized finance could move. That's in a greater space in that sense. Yeah.
And Chris, what about are you guys tracking any of the decentralized finance applications? Have they been seeing growth over the past quarter?
I haven't seen anything particularly big in terms of growth. We love that space. I've done a lot of work with behavioral economics and nonprofit work for financial inclusion and things like that. And obviously loans are a huge, huge area. There's a huge need for it. And depending upon what population you're talking about, they sometimes have very, very limited options, right? In extreme cases, they can only go to payday lenders, right? At least in the United States. And in other places, they have things like, and not places, other populations have access to things like Prosper and Lending Club, where they can get personal loans in a peer-to-peer way that doesn't involve a blockchain, right? And the question is, what does the blockchain really get you, right? Because you can do this kind of peer-to-peer, semi-decentralized thing the way that Prosper does and the way that Lending Club does. And it's pretty good. It works for a lot of people, right? SoFi does the same thing. I'm not sure what you could build in terms of a value proposition on a decentralized version of that would make it 10x better than what you get at the existing players in P2P, right? Clearly, you could make it cheaper because you could do things with stablecoin and reduce some of that. But the options for these people are not huge, right? Depending upon the population, they don't have access to a lot of forms of credit, and many of them don't have credit scores at all. So it's hard to see a decentralized finance play winning in the loan area. But I think in a lot of areas, a lot of like infrastructure places, like replacing SWIFT, replacing some of the remittance market, you're going to see a lot of projects that get a lot of traction for that because how few options that a lot of these populations have. And that's an area where you could conceivably build something that is the best option for that consumer group, even with possible usability asymmetries between the state of the art on that set of apps versus their counterparts in the centralized world.
Well, great. Thank you, guys. Let's go around and get some final comments and thoughts on the panel, and then we'll wrap things up for the break. Zhuang, we can start with you and then go to Tamir and finish with Chris.
I think the future of consumer apps, I'm a very big component of design and UI UX. I think particularly so in where I am, Asia, and in particular Southeast Asia, design and how elegant the user experience isn't really well thought after. So there's a big space for developers or products coming in. It's huge in the US for sure, or even it might be huge in Europe. But I think if we were to focus on the user experience, incentivizing them in a good ecosystem where everybody kind of wins with whatever uptake that there is because of the blockchain, even immutable data, it could be cheaper rates, it could be whatever else not. In that sense, I think that's where the future of consumer will be.
Yeah, and from my perspective, I'm not sure how visible the smart contract decentralized factor will be to the user. That part I'm not sure. I think there's a really significant UX hurdles, but I do think the technology is really cool, and it will allow a lot of people to build stuff like a decentralized finance product, with nothing but just a smart contract. Like the fact that it enables you to create an application like that, where people could make loans or trade assets, whereas before it would be really tough to do that just in terms of the technology. That's why Stripe exists. But here in the Ethereum ecospace, you have it kind of natively. It's as if the dollar was programmable in itself. So I have more faith in that the technology itself could be useful. Maybe not so visibly to the user, but definitely in some of the layers below.
Yeah, and I agree with Tamir. I think the companies that are going to be really big companies here are probably going to be your picks and shovels companies, right? And they're going to be focused on doing cool things on the back end or in the finance system that you can't do with fiat, or that are hard to do with fiat, right? And I think another thing that you'll see is that people are very, very reluctant to switch, especially in financial services, right? They don't change their bank account more often than every 8 years on average. So it cannot be 10% better, and it can't be like a little bit cheaper. It has to be game-changingly 10x better. And right now, we're not really even anywhere close to that. So I think we're looking probably at minimum 3 to 5 years before you get adoption for that sort of stuff.
Great. Thank you, guys. Chris, Tamir, and Zhuang. I really want to thank you guys for being the last panel before the break and the future of consumer dApps. We're going to take a quick break for about an hour, and then we'll be back for the next panel, which is going to cover the future of Bitcoin and cryptocurrencies. Thank you, everyone, again.